One stock, one exchange. Up over 800% in the past 12 months. Not a meme, not crypto, not a startup. A 40-year-old Korean company that makes memory chips. And by the end of June, it briefly became Korea's most valuable listed company, dethroning Samsung Electronics for the first time. On its way up, it crossed a market cap of 2,000 trillion Korean won, approximately 1.3 trillion US dollars, before the recent pullback. More importantly, it is expected to debut under the ticker symbol SKHY on Nasdaq as soon as July 10th. That makes the stock accessible to US retail investors without needing a Korean brokerage account. This is the SK Hynix story, and if you haven't been watching it, you should be. SK Hynix is the world's second largest memory chip maker, right behind Samsung. Founded in 1983, headquartered in Incheon, Korea. It makes two types of chips that are in everything around you. DRAM, the short-term memory in your laptop and phone. And NAND flash, the storage powering your SSD. But the product that changed everything is HBM, high bandwidth memory. The chip embedded directly inside AI processors, including NVIDIA's most powerful GPUs. As of Q1 2026, SK Hynix commands about 58% of the global HBM market. Not a third, not half, 58%. Samsung and Micron split the remaining 42%. Let's take a look at the latest report from April 2026. Revenue, 52.6 trillion Korean won, approximately 36.3 billion US dollars. Operating profit, 37.6 trillion Korean won, roughly $25.9 billion. Operating profit margin, 72%. Let's stop a bit on that 72% operating margin. To put it in context, around the same time period, Apple, the world's most profitable consumer company, posted a 32% operating margin in Q1 2026. TSMC, the world's dominant chip manufacturer, 58.1%. Samsung's DS division, 65.7%. SK Hynix, 72%. Now, here is the part most investors miss. Everyone frames SK Hynix as an HBM story. And they're right. SK Hynix controls over half the global HBM market. But look at where the actual DRAM revenue is coming from. Server DRAM, the high-density DDR modules powering every AI data center, accounts for nearly half of all DRAM revenue, approximately 48%. HBM sits inside the graphics category at around 25% combined. Every time SK Hynix shifts wafer capacity toward HBM, conventional server DRAM supply tightens. HBM demands far more process steps per wafer than standard DRAM. The result? DRAM contract prices surged 90 to 95% in a single quarter in early 2026. SK Hynix didn't just win on HBM. Its dominance in HBM created a rising tide that lifted margins across every other product it sells simultaneously. Two developments most international investors might be missing. First, the NVIDIA relationship. This relationship is not a typical supplier arrangement. Jensen Huang has called SK Hynix an extraordinary partner. SK Hynix co-develops HBM specifications with NVIDIA before production begins. That means SK Hynix knows what NVIDIA needs 12 to 18 months before a chip ships. UBS projects SK Hynix will capture roughly 70% of the HBM4 market share for NVIDIA's upcoming Rubin platform. No competitor can close that lead quickly. It is a co-development lock-in, not a purchase order. Second, the US factory. SK Hynix is building an advanced memory packaging facility in West Lafayette, Indiana, in partnership with Purdue University. A $3.87 billion investment. Groundbreaking. March 2025. Facility completion targeted for early 2027. Mass production commencing in the second half of 2028. The facility will produce next-generation HBM for US AI customers. This directly addresses supply chain risk for US hyperscalers and makes SK Hynix a politically favorable partner in the current US semiconductor policy environment. Memory is a cyclical industry. Booms are followed by busts. That is the history. The question every investor in SK Hynix has to answer is this a cycle or a structural shift? The bull case, AI data center buildouts, mostly show no sign of slowing. Every new AI model generation requires more HBM. HBM supply is structurally constrained. Adding new capacity takes years, not months. This is not a typical DRAM cycle. In fact, SK Hynix sold out their entire 2026 HBM production capacity through long-term agreements and is actively booking pre-orders deep into 2027. The bear case, AI capex cycles can stall. If hyperscaler earnings disappoint, GPU orders slow, and HBM orders slow with them. So it is a question of whether AI infrastructure spending remains elevated long enough for SK Hynix to extend its lead. The answer depends on demand visibility you don't have, and neither does the market. Let's take a look at some of the financial metrics to understand the value of the company. First, the trailing PE, the current market cap divided by the net income of the past year, and the forward PE ratio, which is based on analyst consensus earnings estimates. As you can see on the forward PE column, forward-looking multiples look cheap when compared to Nasdaq's average, which is sitting near 25. However, when comparing Samsung, Micron, and SK Hynix, the PE ratio can be a massive trap. In the cyclical chip market, a low PE usually means a peak, not a bargain. That's why Korean analysts rely heavily on the price to book, or PB ratio, instead. These companies own billions in physical assets, such as factories and advanced machinery. This book value gives analysts a rock-solid floor to measure real value when earnings vanish during downturns. The market is shifting. Thanks to the AI boom and high-bandwidth memory, SK Hynix doesn't feel like a cyclical trade anymore. Analysts are now pushing target PB bands to historic highs because the AI returns on those assets are completely off the charts. At the time of making this video, SK Hynix currently trades at approximately 9.5 times book value. Here is why that number matters specifically right now. Korea Investment and Securities, the firm behind the highest Korean brokerage price target, arrived at their 3.8 million Korean won target like this. They projected SK Hynix's return on equity at 60%, sustained from 2026 through 2029, and applied a 6 times price-to-book multiple. To put this into perspective, the traditional cycle PB multiple ceiling was around 2. The stock is now trading at 9.5 times book. But this is based on current valuation and past year's earnings. What those numbers are actually saying is that profitability in this supercycle will be high and that the investors will be happy to pay a premium of 6 times the book value to own the stock. Still, these PB estimates are unprecedented, and the margin of safety at such levels is thin. Where does Wall Street stand? 37 analysts currently cover SK Hynix. The consensus? A buy rating. The average 12-month price target, approximately 3.2 million Korean won. The bull case? 4.7 million Korean won, but more on this shortly. That combination tells you the analysts like the business and believe the supercycle is not over yet. Before we move to risks, there is one more dimension that is worth covering. And it is the reason Nomura holds the most ambitious price target of any firm covering SK Hynix. In 2018, SK Hynix joined a consortium led by Bain Capital to acquire Kioxia, the Japanese NAND flash maker formerly known as Toshiba Memory. The investment, approximately 4 trillion Korean won, or roughly $2.6 billion US. At the time, it was classified as a long-term financial investment. Most analysts treated it as a footnote. Fast forward to today. Kioxia listed on the Tokyo Stock Exchange in late 2024. Since then, its stock has surged more than 2,500%. In June 2026, the Bain Capital Consortium launched block sales of Kioxia common stock, during which SK sold an estimate of 6 trillion won, approximately $4.1 billion, in profit for SK Hynix. That is 1.5 times the amount invested, and a big boost to SK Hynix cash holdings. And this is not SK Hynix's entire position in Kioxia. They still hold more common shares and convertible bonds representing 15% future equity stake at Kioxia that can be liquidated past 2028. Their holdings is estimated at around 50 trillion Korean won, approximately $34.4 billion. Nomura is the firm that spotted this most aggressively. After raising its target from 2.34 million Korean won to 4 million Korean won in May 2026, Nomura raised it again to 4.7 million Korean won. The Kioxia revaluation is a core part of that call. SK Group Chairman Chae Tae-won described Kioxia not as a pure financial investment, but as a potential strategic partner. When you see Nomura's 4.7 million Korean won target and wonder what justifies such an outlier call, this is a significant part of the answer. I would be doing you a disservice if I only showed you the good side. So, here are real risks to be aware of. Risk 1. Competition and HBM oversupply. Samsung is investing aggressively to close the HBM yield gap. More fabs, more capital, government support, and Micron is heavily expanding its global production footprint. If supply starts rising, pricing pressure arrives and operating margins will compress fast. Risk 2. Macro and AI capex slowdown. The entire thesis depends on hyperscalers, Amazon, Google, and Microsoft, continuing to spend at record levels on data center GPUs. Any macro shock or AI monetization disappointment could trigger a pullback in orders. And here is the macro dimension we might be facing soon. If inflation reaccelerates and central banks are forced to hike rates, two things happen simultaneously. Corporate borrowing costs rise, slowing data center investment, and high valuation growth stocks reprice lower, as higher rates reduce the present value of future earnings. SK Hynix, trading at 9 times book and on a supercycle narrative, is particularly exposed to this scenario. A rate shock would hit the demand story and the multiple at the same time. At the end, every investor has a different risk tolerance, time horizon, and portfolio situation. The scenarios and analysis outlined here are information and frameworks for thinking, not recommendations for action, as I am not a financial advisor. This was the K-Market Lens breakdown on SK Hynix as it nears an IPO in the US stock market. If you are interested in the Korean stock market and its companies that contribute on a global scale, subscribe and drop a comment below. Until next time, invest with knowledge, not with emotion.